in real life.
Hello and welcome to another episode of In Conversation With. In Conversation With is a series where we invite senior management professionals in search of executable advice. My name is Paresh. I'm a member of the board of directors at CASI in New York. We are one of the world's largest peer-to-peer group for sustainability. We also run the world's largest volunteering platform called CSR Diary. Today's event is part 2 of the family office. Promises to be an interesting one. We have great speakers and we have some great audiences. So this event, I really look forward to talking to all of you. Now, as usual, before we go on to the first presenter for the day, I have a question. Anyone can answer the question. I would expect a short answer, 30, 40, 50-second answer would be nice. The speakers or the audiences may opt to give an answer. So here goes. Family office as a concept was developed 100 years back. But today, more and more, this has become a retail product. So people doing will management, people selling mutual funds, people doing any one task from the entire show of family office are also called as a multifamily office. So what is really happening here? Are we looking at a retail product called family office a few years from now? And we can look at a large bank like Standard Bank or an India Infoline selling family office products across through the feet on street. Where are we really going in terms of evolution? Any thoughts?
Well, perhaps I can just kick off, seeing as you did mention Standard Bank. I do agree with you that in principle, it has become a lot of wealth management terminology. It's all around the financial returns, etc. I think, though, for us to truly deliver on the family office philosophy, we absolutely have to take into account more of the softer type of principles that are keeping up our families at night, because sometimes those are more important to get right the principles and the governance structures before we can even move on to the actual wealth management side of that. So, that's just what I found in my experience.
Mm-hmm. So let me ask a follow-up question again. I speak to a lot of family offices. I am an advisor to 2 large family offices because I'm close to the promoters. So I'm managing upwards of $9 billion in India. I'm advising them on investments. And so half the family offices I know swear by crypto, saying crypto is the next big thing and we should get on the bus. The other half of the family offices say, let's stay away from crypto. We know how to make money in our business. We understand a few businesses. Let's stick to the businesses we understand. Opinion, anyone?
So if you see, crypto is just like the new frenzy which has divided the world right from all generations, from millennial to boomers and even Gen Z. So the world has divided it into two streams. One, those who believe in it, and one who doesn't believe in it.
Mm-hmm.
Many influential, as you said rightly, the big family offices, businesses, they also are in the view of should they invest at this stage or should they not? Because there are so many Bitcoin, and plus across the world, if you see currently in last few months, there has been too much negativity around all governments where they are not trying to promote Bitcoin or crypto as in currencies across. So it's a tough way going forward. But I think once the government legitimizes, then I think
So which side are you on? Let's not stay neutral. Which side are you on? In the naysayers or the believers?
Okay, I believe in crypto, but I am not personally invested, nor I get my clients to invest in that ways.
Okay. I would like to ask the same question to Subrat or Abhishek. Abhishek is from my college. I am Calcutta. Subrat is from my bank, IDBI. I would really appreciate a short answer from Abhishek or Subratji. Subrat, Abhishek, are you a naysayer or are you a believer?
I'm still trying to. Hi. Thank you, Paresh, for inviting me. I'm still trying to get to grips with it. But I think this is something similar to what happened 20 years back when we were questioning e-commerce, and right now it's there. Now, the only point is that clearly what what I've understood about Bitcoin is that it reduces the transaction cost significantly, and transaction cost, compounding of transaction costs actually across banking, will result in increased IRRs for clients. So, but the only point is that is the world technically developed to really adopt it so quickly, and that's where the short and quick answer is that it's something that I would like to invest in, but I'm still not ready to believe in.
Mhm. So you're a believer, but you're not really there yet. Subrat, any comments?
Correct.
I'm both a believer as well as a player in crypto, because crypto is going to be the future thing. Gradually, the resistance of the governments will crumble down going forward. Maybe it will take, nobody can put a time to it, maybe a year, 2, 5, 6, or whatever many years it might take. But crypto will be the future thing going forward. With the blockchain platform, crypto will be very, very welcome going forward. Thanks.
Great. So we have a believer amongst us. Let's move on to Lisa Foster, the head of family office, Standard Bank Group, South Africa. Welcome to the show, Lisa. Please tell us your opinion on family offices. Tell us your angle. If you have a presentation, that would be nice.
I don't actually have a presentation, so I'm going to just try something different. But my name is Lisa Foster, and I'm the global head of the family office for the Standard Bank Group. A bit of background on Standard Bank. We're the largest African banking group by assets, with a market cap of approximately $14 billion US, offering a range of banking and related financial services in sub-Saharan Africa, employing over 47,000 people. Sorry, I just wanted to change this quickly. And also, so we have a 52% South African shareholder and 48% international investors, with ICBC owning 20% of the Standard Bank. So we as a Standard Bank Group are embarking on probably the biggest transformation that I will ever see in my 31-year career, and that is to move on to being a platform business. And so to demonstrate this by way of an analogy, so we want to move from being the shop in the mall to actually being the mall for our clients, either by outsourcing our solutions or insourcing with various external partners. And so I mention this because I think the strategic direction that Standard Bank is going in bodes very well for our family office solutions. And so I believe that the new buzzword is called co-opetition. So I've been asked, obviously, to share some of my thoughts and insights on working with family office clients globally, and especially more so some themes that have been emerging from COVID that I think will forever change the family office dynamic and landscape. So COVID created an economic and humanitarian crisis like no other in our lifetime, and also no roadmap to fall back on. I almost kind of feel like we've had a decade of transformation in just over a year. The pandemic illustrated the starkest possible terms how vulnerable our societies and economies are to environmental shocks as well. Global warming related environmental risks were already the dominant issues of our time, but COVID seemed to move them even higher up to the agenda. And so in the wake of the pandemic, we're seeing growing investor and client interest in products that support transition to a more sustainable economy, including impact investing in ESG products and services. And so we as a Standard Bank Group support the commitment that has been voiced by shareholders all over the world to really build back better. So impact investing moved beyond the realm of just intent. And so our family office clients have really included this as part of their investment strategy. The concept of impact investing is not new. Families of substantial wealth and philanthropy have been intertwined through the last many, many years. So it wasn't unusual to see that this became more of a theme for our family office clients through the pandemic. So what we also did see is family office clients really looking for alternative investment opportunities in the form of directly held private equity investments. 62% of our clients anticipated identifying opportunities for private investments as their top anticipated financial action in 2021 and 22. I think what was motivating a lot of these clients seemed to be driven by an underlying entrepreneurial confidence in their own experience in running their own family enterprise business, and obviously the desire to search for higher yields versus returns achieved in the normal asset class, traditional asset classes. I think this is especially relevant now in South Africa, where we're experiencing multi-year lows in respective interest rates. I think some clients in our family office believe that their personal experience gave them an advantage over the professional investment community, and also starting to consider co-investment opportunities and prospects to share in off-market opportunities and also to de-risk. This, however, seems way easier in theory than in practice. I think the challenge that we've experienced is that clients come across almost without exception is getting access to deal flow and appropriate networks that they trust. I think working with Standard Bank has proven to be quite valuable to our family office, especially over this period, to almost play that role of a super coordinator and to bring them quality opportunities that we are exposed to, but purely because of our interconnectedness in the ecosystem in which we as a group operate. We've established a global investment club, which gives our clients a platform to showcase their businesses to potential equity players, and also to deploy their liquidity into off-market opportunities. In terms of debt and capital restructurings, we witnessed an increasing appetite that certain clients have in capital markets for distressed debt, which is actually becoming the new alternative asset class. We've used the Global Investment Club to position our African Women Impact Fund to also attract potential investors. The objective of this fund is to accelerate the financial inclusion of women in Africa in the informal economy by promoting UN Sustainable Development Goals. And the priority of this fund leans towards high impact sectors such as education, manufacturing, healthcare, clean energy, and agriculture. And it is also the first fund of ours that is led by an all-woman investment team. So we're quite proud of that. And to date, we've raised over $50 million for deployment. Another key theme that resulted from COVID from our family office clients is a heightened commitment to family education. And it's something that's really close to my heart. We facilitate an annual Global Leadership Academy offered to the next gen family members in the 25 to 35-year age bracket to help equip this generation to transition more confidently into family enterprise. We've also helped the patriarch or the matriarch reach important decisions about succession planning, and to the extent that the next generation should start to take up their role in the family business and have a voice at the table. And then we also hold a Women's Wealth Academy. It's in the South African context. We look after about 1,800 trading operations in the commercial space, and 70% of the leadership positions in those entities are held by women. So it obviously stands to reason that this is really an important aspect for family office as well that we need to focus on. I mean, we all know that the statistics show that the family wealth is largely dissipated by the third generation. And the principal cause of wealth being destroyed have arisen from those intangible risks, so often getting overlooked by members of the family, such as poor communication and a failure to prepare the next generation appropriately and timelessly. So it is indeed a privilege to be able to help our families navigate these important but often very sensitive issues. Research shows that family dissipate, the leadership is far more, the disconnect between the leadership and the family is far likely to destroy wealth than any investment decision that gets taken. So we're really excited to be partnering with our families and, you know, being with them on the journey. I think back to your original point, I think that family office, if we really truly want to deliver to the family office environment, we need to understand them holistically. And the softer, more sensitive issues, I think, probably need to be understood before we can move on to the financial wealth management part of what we do. But that's just some perspectives from my side.
Thank you very much, Lisa. Do you also offer family office services outside of South Africa, or do you stick to your home base?
No, we do. We are global. We are global offering. We operate in 20 countries in the African continent, and we've also got presence internationally as well. And often, you know, most of our family clients are multi-jurisdictional and multi-generational. And so to be able to truly say that this is what we do, we have to have a global offering. And like I said, right up front, we partner with external partners as well, where our insourcing capabilities does not lend towards an appropriate solution, or we just choose, or we don't operate in the jurisdiction in which the client wants to operate. So it is truly a global offering that the Standard Bank does offer.
See, we come across many kinds of family offices. So there are various types of family offices. But broadly speaking, there are three types: the single family office, the multi-family office, and the family office offering through a bank. Now, the single family office is very, very strong in direct private equity deals because they only employ people for private equity deals, and that's really what they do. So it's a very focused approach. Whereas when you go to a bank, a large bank like Standard Bank, the inherent advantage that a bank has is its investment banking business. Yeah, because you are already in the investment banking business and you are a deal maker across so many countries. Then you can always showcase the deals to the family offices you're working with, and you get the right deal with the right kind of patronage and verified deals to showcase to your family offices. So the trust factor is very high when you are showcasing deals because it is through your own channels. How easy or difficult is this, transition or integration with the investment banking department and the family office department to showcase the deals and then work them through? Is it very difficult to manage or is it easy? What are the challenges?
Look, it comes with its challenges, no doubt, because we are such a large institution. But I think one of the things that we're trying to do through becoming a platform business is that we will stop operating in silos into the various business divisions within the Standard Bank and see a client as a group client. And so all the internal challenges seem to dissipate over time. And I think we've got quite a lot of credibility in the family office space. And so our internal stakeholders know what we're about. They won't just bring us a deal that we know is not going to land for any reason. And so we do a lot of internal marketing as well to make sure that when a client approaches us for potential investment into other businesses that we might operate, that the filtering into getting the right deal at the right time becomes way, way easier. And so that when we bring an opportunity to a family office client, it's really laser focused, and the success rate of that is way higher than what we probably would have had before the platform thinking.
Oh, that's a good point of view. And the key word there was internal selling. So you do a lot of internal selling freehand between departments. So most of the people in this room have been bankers or are bankers. And that is really tough. The internal selling to stakeholders freehand is the key to success. Thank you. Thank you very much, Lisa. We will have follow-up questions, I'm sure, from the audiences. Let's have a chat with Mayank ji. Mr. Mayank Sharma, I understand you have a presentation.
Yeah. I'll just try to run through it if I can.
So, Paresh, do we ask questions afterwards?
Yeah, later.
Lisa,
so
at
we
the
can
end,
ask questions to Lisa and Mayank both, and they can answer, alternately.
Thank you.
1 second. Is it visible to all?
Yes, absolutely.
Okay. So I'll not take much of your time because I just wanted to create something in terms of family office, which I personally believe in terms is going to change when the huge millennial workforce across the globe, when they're trying to get into this line of wealth. So as far as family offices are concerned, IFL Wealth, a subsidiary company, listed company, is the largest private institution in Indian market after the banks. And this is a couple of points which we are trying to create on a new workforce or a new set of investors which are going to be changing the market for next couple of decades. The new trends which I can see here is creating a legacy with diversified and impactful investments. I will take that point forward when I was hearing to what Lisa and Stency has been doing for the across in CSR markets in South Africa, which is usually commendable. Access to global markets is driving investment through availability of better choices. So anybody sitting here in India can now invest in US across many other forums. Startup scene is buzzing up on a big scale right now across the globe. We just had a very successful listing of Vimeo on there, which is one of the new startup scenes which is there. Investing in firms which can be future unicorns. So early investing has been changed, the methods has been changed, the investors, their aspects of investing into early startups, into various forums of and various technology driven new age technology and digital transformation is attracting family offices in a big way. Family offices are not shying away from offering attractive compensation to hire top talent. Post COVID-19, family offices are diversifying their investment not limited to private equity and VC, but they are even repositioning themselves across various things. As you rightly said, half the world is divided into crypto, to buy it or not to buy it, or so that's way I think things are going to change a pretty uh, decent there. Family office and wealth management firms will coexist due to robust economic growth in the country. And as you rightly said, there would be a specific investors who would like to have their privacy and control and their belief in individuals more than a couple of large banks even also there. So new investment avenues are tech funds, health, energy, fintech, education, artificial intelligence, which has been across there. Early stage startups, there have been quite a few huge investments which has happened over the last period of 5 years, 5 to 7 years, where even family offices along with the large VC funds, they have started investing early there. Direct investment into social impact firms. Traditional. So this is what the point which I wanted to make. Traditional philanthropy, I personally believe, is going to be replaced by direct investment into social firms. Instead of investing into NGOs directly, invest in firms which have a social sustainables. And profit will not be the driving factor ahead. Impact will be. Building a brand plus co-investing. Co-investing is beneficial from risk sharing point of view. And it also brings complete complementary expertise to the people. So I think that's it. That's a very small presentation which I carried today. So this is Mr. Paresh from my side.
Thank you very much, Mayank. That was short but crisp. India Infoline has a very, very large presence in India. Mr. Jain has an illustrious career. He's an IIM Ahmedabad alumnus. He's also a chartered. And you guys are doing pretty well. Tell me something. India Infoline was basically into retail. It's a lot of retail business that you guys do, 5paisa.com and all. Yeah. So, how do you cater to clients? Is it a separate business model? Do you use the same business to go? Are you? What is really happening? Are you torn between two sides?
So no. For IFL long back, we have understood. Okay, we need to have synergies. Plus, we need to enforce all 3, 4 large vertical of ours to work it separately. So we have IFL Wealth, which is a listed entity which works only on large wealth management, family offices, and investment there. So we have assets some around 2 lakh crores there of AUM, which is on a listed entity of IFL Wealth, which is typically HNI and family offices. We have one more listed, which is IFL Securities, which does retail businesses for broking. We have a 5paisa which does business only for discount broking there, and we have a big company called IFL Finance, which is on a 90% retail NBFC. What we've done over the last 4-5 years is we have demerged all our major businesses into 3 or 4 typical listed entities where they do their business and they cater to their customers as per their needs and their markets.
Okay, Mayank, do you also collaborate with other family offices?
Yeah, so we from a wealth perspective, we have been early investors in Byju's and so many early startups, along with family offices from across the sectors also. Yes.
So how does collaboration work? I ask this for the benefit of a certain viewers in here. There are people in this group who manage billions for families. So how does the typical collaboration work? If I'm a family office and you are such a large multi-family office, I would be afraid of introducing my clients to you. How does a collaboration really work? How do you manage to work with other family offices? How does it really work?
In these days, it is absolute transparency and it is about absolute professionalism which we bring on the table. We
Mhm.
we bring our spectrum of services, products, and it has been done with absolute transparency and the belief of what customer would actually need at a certain level. So you can grow your wealth to a certain level, which is binded by if it is managed by a short office or a small a small group of individuals. When you get into a large set of organization, you get exposure to various products, various linkages, and then various exposure to various startups. So we do a very transparent kind of collaboration with.
Okay, I have one more question because before we throw it open to the group for a lot of questions, I would like to ask these questions to Mayank also and Lisa also. See, the question is, family offices typically work for wealth, risk management, philanthropy, children's education, making sure that the wealth is, ascertained and it remains for the generations and all. Now, what happens somewhere in between is there are specialized family offices who help these clients, your clients, in setting up the right boards. So if I am your client and if I'm setting up a new company, I will rely upon you. Okay, could you help me get a board member for technology, or could you help me get a board member for corporate governance? So clients are usually in need of board members. I manage money only for two people, two large families. But they also continuously have a requirement for board members in the newer companies that they start, right? So, how do you really address this opportunity or problem, whichever way you look at it? How do you address this? Do you reach out to board members and say, "Hey, I have a client who needs a board member"? Do you really help them, or do you shy away from this, saying, "Sir, this is somewhere I cannot help you"? Or how do you manage such requests, or you don't get such requests? How does it happen?
So
So, from a South African perspective, we don't often get requests to be part of to be on the board. What we do is operate as co-trustees, part of their financial investment board, but just as an advisor. So yeah, it's not something that from a Standard Bank perspective, we would actually typically be a board member. But what we could do is we have also got a panel of other individuals that do this and understand the family office principles quite intimately. And so we would just probably reach out to them to say, would they be comfortable, just doing the introduction. We can't take any real responsibility and sort of connecting parties in that responsibility, but we certainly do have a panel that we could reach out. But, us as individuals, we don't typically do that other than just co-advise as a trustee.
So you do have a panel. You have people in mind who you reach out to.
Yeah, we would. And obviously it's important that they understand family office principles because, and sit on their council. It is one of the things that we've considered from a lending perspective, because that seems to be quite a key requirement for family office. We have started to engage with our credit partners to say, not officially a board member, but would they sit on their family office council just to guide in terms of just helping from a structured lending perspective, but not an official board capacity.
Okay. Mayankji, do you have an opinion on this?
yeah, one small view as we officially don't have, so we don't officially entertain such requests, but on a personal basis, we might refer somebody who fits there, and then they can carry forward their due diligence and see if the person is fit from both the sides.
Very well. We can throw the room open for questions. Before that, Christoph, how do you handle this? you run a fund, you are an investor. Do you manage to sit on so many boards, give them time, or do you select people on your behalf to sit on boards? How do you really manage this? Because it becomes tough. I find it very difficult.
So we as sustainable funds, we are expected to engage very actively. So when we have issues, we want to improve ESG quality or to improve the positive impact, we give constructive criticism to the senior management. So not only investor relation, but senior management, hopefully to improve something. And that is what we call additionality, that we can prove that we help to make the world a better place. But unfortunately, we do not have the resources to join the board. So we would consider, if we would be invited to do so, it requires a lot of time. But then from a compliance perspective, we would not be allowed to hold or trade that company anymore. So it would be a decision to join the board and then act for them, but then we cannot have the company in our portfolios any longer.
Correct. Yeah, absolutely correct. Yeah, we can have. Yeah, Hayden, please. You have a question, Hayden, please.
Just on the issue of managing conflict within the family units, what's the approach and what's the sort of policy on managing either the potential for conflict or when a conflict situation actually occurs? How is that done? How is that mitigated? How is that managed?
Lisa, would you like to take that?
Yeah, that's a really great question. And I think it comes back to my point when I raised to say that very often conflict in a family is more of a reason as to why wealth is dissipated rather than the actual investment decisions or bad investment choices that they would make. I think what is important as a wealth advisor or a family office advisor is that you have to show a very neutral and impartial, unbiased opinion. And so very often it's not the best, in my opinion, solution for that person that's going to manage the conflict within a family dynamic to be also the wealth manager or the advisor or that super coordinator within, for instance, in my instance, bank. So what we would typically do is, and also the other big thing that has come out of some of our family offices, that to manage conflict within a family dynamic culturally, whoever it is that we're going to probably outsource in our case to facilitate, the changing dynamic within family conflict would need to also culturally understand what is important to that family in terms of their purpose, their vision, and their objectives, and to be almost impartial and really understand what is the ultimate end goal. But in our case, we would probably look to outsource that to some of our external partners that actually is their expertise. But it is a very, very sensitive topic. But at the same time, it's probably the most critical thing that if there is an undercurrent of conflict management within the family, that probably I would suggest be the priority to sort out first before you can start to embark on a family office journey.
Thank you very much for that answer, Lisa. I'll just introduce Hayden. Hayden was the CEO for the Securities Exchange Board at Trinidad and Tobago. He's a very strong patron at CASI. Please, anyone else has a question? Subrat, Patrick? Oh, very nice. Then I guess we are at the end of the show. Yeah, please, Abhishek.
So, you see, I'm working with a lot of family offices in North India, right? Now, which is a very different animal from what Paresh you're working with in Bombay. Now, here, what I'm trying to understand when both Lisa and Mike said that there's a lot of focus on investing in startups. Now, the family office that I'm working with, they're looking at conserving capital, and that I think is a family office. They're not looking at very, very high returns, right? Now, when you're looking at startup investments, and I'm talking family office who got, let's say, 10 to 12, $15 million of, you say, assets right now, right? Investable assets. It won't be $1 billion assets like your clients, but let's say 20, 25, 30. Now, if you're saying that they are ready to invest in startups, how does it work? That's what I'm not able to understand. That, because I've been trying to talk to my clients to invest in startups, but for them, even a 10% of a $30 million, let's say, asset under management, $3 million is not enough for a Series A or a Series B, or let's say even because you like to look at 10 deals. 10 out of the one deal might work, right? In a startup case, right? So how do you make that work? That's what I want to understand. Especially because there is a lot of interest. What I see a conflict is that I'm dealing with two generations: the person who's decision maker and the person who's an influencer, who's a young guy, 35, 40 years old. He wants to invest in Bitcoin. He keeps on asking me about cryptocurrency. He keeps on, right? And then when we take it forward, we take a reasonable lead forward, it gets short down because the second generation wants to conserve capital. The third generation really wants to flourish, right? How do so my question being that what kind of clients are you seeing the bigger clients investing in startups, or even the smaller clients and coming in club deals investing in startups, kind of deals which are high risk deals, or let's say cryptocurrency deals? That was my question. Either Lisa or Bank can answer. Both can answer, and you can go first, depending on their experience.
Maybe let me just kick off. So from one of the big four commercial banks in South Africa, Standard Bank obviously has got a huge amount of segments that we actually deal with and service. What I'm talking about when I think family office is also family enterprise, and it could also cover startup businesses, different life cycles within a business. I think the principles, though, of managing family, especially where it is a family business and the objective is to hand over to second generation or third generation, I think the principles are the same, irrespective of the level of revenue or the level of profit margin, etc., etc. So if I'm understanding your question correctly, when it comes to startup businesses, from our perspective, they are possibly even looking at merging with other families, but that have got an appetite to invest seed capital into a startup business. And so that obviously is a whole nother dynamic where you're bringing another family into the conversation. But I'm not sure that I've got your question correctly, but I think the family office principles apply across the board and not just to a very elite, ultra high net worth level of clients. And so I think it's just really, for me, and I talk to my team all the time when they're dealing with family office or family businesses, very first starting point is to get the key players of a family dynamic around the table and to really, really understand what is important to that family and what matters most to that family at this point in time. Because obviously it's different cycles, different events that actually happen. Once you understand what that vision and purpose is for that family dynamic, then I think that you can start navigating to the different players or the ecosystem that I think is important to be able to solution for that specific family. I'm not sure if I've answered your question properly, though.
Got it. All right. Thank you.
Thank you very much, Lisa. I would like to reach out to Christoph. Christoph, you have something for us.
Yeah, as we are also a bit small, not quite startup anymore, but I would love to ask you kindly if you could have a look, if you have a moment, at www.esg-pm.com, because we are very keen to have feedback, to have your perspective. So that would be extremely valuable for us if you could spend a moment. So thank you very much for this.
Oh, absolutely, Christoph. I will circulate your website to all the people today and the people yesterday. Even yesterday, we had a family office session and we had some very interesting people attending it. So I'll definitely circulate your details to them. Done. If we have any more questions, please let me know.
I'm the guy who's asking questions again and again. I'm sorry, but again, a question from Lisa, because I've worked for a couple of years in South Africa myself. I believe you're saying she's got an office in Sandton. I used to work across the Wanderers cricket stadium, a great place to
Yes.
work. I was a director with Ernst & Young at that time, merger and acquisition. So what I want to understand is that in case of the South African clients that you have, are they looking at distress opportunities in India? And if that's the case, can I reach out to you directly? Number one. Number two, what I understood was when I was there for a very reasonable small period of time is that most of the wealthy clients in South Africa are in fact looking to invest outside because of the BWE, etc. Things that that are there, right? And it's becoming difficult for white families and the really prosperous families to really prosper well. So, is that also a kind of a potential opportunity for a lot of your clients? Let's say where they want to really actually invest outside India, right? Or invest outside South Africa. And that's coming from the fact that I'm seeing a lot of that in North India as well, where lots of clients, because of the current regime, are looking to invest outside India, not to invest within India, because of what reasons that they find that countries outside India are more investor friendly or more friendly to them than maybe within India. So is that something that's coming across with your clients?
It is absolutely. A lot of our clients, and it is not concerning, but it seems to definitely be increasing in terms of the amount of inquiries, the amount of activity that is actually happening with some of our family offices wanting to externalize funds outside of South Africa for a whole lot of different reasons. I mean, a lot of our South African generation 2 are studying abroad. The families are dispersed all over the world. I know that from my own family, my siblings are in the UK. And it's definitely, without a doubt, I would probably venture to say about 70% of our family office and family enterprise clients have got offshore either business interests or they are externalizing purely by the wealth management structure. So I definitely think that there is an opportunity. We do a lot of trust and fiduciary structures. We set up offshore structures. We obviously global, but there are often times where the client wants to externalize his funds too. We don't necessarily have a presence, or we don't operate in that jurisdiction for whatever reason, for licensing reasons or whatever. And so at that venture, we would absolutely be reaching out to reputable external partners to be able to help us deliver the whole end-to-end process for our clients. But absolutely, as a theme, South African clients are definitely externalizing funds. The benchmark was sort of typically 30% of the overall net asset value. It's, in my opinion, it's definitely increased to more than 35-40%. Yeah, for concentration risk reasons, for diversification, etc., and political risk.
Thank you very much, Lisa, for that. With that, we come to the end of the session. Thank you all very much for being here today. It was a very interesting session with Mayank and Lisa, and I'm sure it added value to the guests as well. Thank you all very much. Thank you, Mr. Moses.